Greetings. Welcome to my weekend market recap, 26 February 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems for my trading decisions. They run on Metastock and TradeStation platforms as add-ons. As you will see in recent webinars, including today's one, I am more and more using only Q Global and Q Dives programs that run on Metastock. I see less reason to use TradeStation now. Though I use TradeStation as a brokerage platform, therefore I do use the Q Elite on TradeStation for my trading during market hours. For analysis, etc., I find Q Dives and Q Global on Metastock works better because of the way the charts are organized and the ease with which I can navigate between different Q programs, completing the 360 degrees analysis. Let's start with a look at the global markets, starting with Australian index, all ordinaries. When price came here, I was expecting a pullback and that happened. Then it stalled at the yellow direction line and the trend line resistance, created bearish indecision, bear release signal, bearish candle with upper tail. Around this time I mentioned that I will prefer a bearish trade. Then we had a bearish flow day, go with pro short setup, and after that price has come down. Now it is in a clear downtrend. The downtrend started from this point when the support was broken. We had a swing high and a shorting opportunity using the flow signal. Price has come down enough to cover the risk distance. It is clearly bearish in a downtrend. No buy setup, and it is 1 to 3 days late to take a short setup. Topics index, Japan market. In the last webinar, I mentioned that topics was similar to Australian market, and that is continuing in the current week also. After coming well below the lower boundary, after breaking down from support, recovered to the yellow and white direction lines to the trend line resistance, displayed bearish indecision, bear release. Then came a bearish flow day on this day, that was a short signal day. After that, price has come down enough to cover more than the risk distance. Profit in the short position could be taken. Clearly in a downtrend, no reason to buy and too late to short. China market, CSI 300. CSI 300 is holding on to the very long term weekly trendline support. I will not like to short now until the trendline support is broken. Another reason not to short now is we don't have any short signal, of course. In the daily chart, we had a bearish flow candle on this day, Thursday, but by that time price was too close to the lower boundary. We would not have an attractive reward risk ratio, and we would not short on Thursday because price would be too close to the weekly trendline support. If we look at the daily, price is coming down with lower high, lower low. Therefore, it is in a downtrend, but we are not going to short when weekly trendline support is nearby. Footsie index, UK market, this was in an uptrend in the last couple of webinars. That uptrend is continuing. It did pull back sharply on Thursday, which brought price very close to the trendline support in daily as well as the trendline support in weekly. They work almost like a magic, isn't it? On Thursday, I would not like to buy, but on Friday, when price started going up, using the intraday pivot chart, you could easily take a long position with very low risk, and you would end up with attractive reward. By the close of the day, you could book partial profit and hold on to partial position. Looking at the very bullish candle, even if the trade was initiated using intraday pivot chart, you might not want to close the full position. If you traded using ETF, for example, or futures, another approach would be to close the futures or ETF position and then using part of the profit by bullish options positions. That way your profit will be guaranteed, and you will also have an upside if price continues to go up next week. If we look at the daily, we can see that price recovered very nicely to this trend line support as well. This is one of the global markets that is not in a downtrend. If you look at weekly, we have to say it is actually continuing in the uptrend. And lastly, India's Nifty 50 index. Price was being supported by the weekly trendline support. I think the weekly trend line was around this point and also around this point. When price came to these levels in the daily, you could look to buy. And now price has broken below the weekly trend line support and this weekly trend line support and below the daily watermark support. So it is not in a sideways move anymore. Until previous week's webinar, it was in a sideways move. That sideways move is broken now. This breakdown happened in Japan and Australia earlier. The same breakdown from watermark pivot happened in India this week. Then it tried to go up on Friday, but the candle color is still bearish in both weekly and daily. If it goes down next week, the downtrend will continue. That is a look at the global markets. Most of them are now in a downtrend except China. China is also in a downtrend, but it is, sorry, I should rephrase. All of them are in a downtrend except UK's Footsie index. And of the markets that are in a downtrend, I will not look to short China market because it is near weekly trend line support. It is okay to look for shorts in Australia market, India market as well as Japanese market. You could short last week itself. Now if we want to have a view of the global index, that is the custom index in Q Global Market Breadth, in the previous webinar I showed, and I had tweeted earlier, that though USA market had broken down by that time, the overall global index was still inside a range, and now it broke below that range. So the overall global index is also in a bearish formation now. Interestingly, I'm seeing this live with you. On Friday, the global index as a whole displayed a bullish headwind, possible reversal signal. However, it has a small upper tail, price closed right at the white direction line. All the other direction lines are coming down. I will not like to buy now. It is possible that these watermark pivot support levels that were support before will act as resistance now. That is where the Friday's up move stopped. Next week it may continue to go down, and if it continues to go down, that will be the low risk trading direction. Global markets not looking bullish. What about USA market? Let's start with QQQ. And while you are watching me, you will see how easily I am analyzing the instruments using Q Global now on Metastock 18. Almost effortless, looking through the same instrument through using different views or templates, which would not be so easy on Q Elite or any other platform that I know of. QQQ, starting with USA market analysis. In the previous webinar, I expressed my bearish view. We had bearish flow on these 2 days. You would short on the first signal day itself. We are active traders, Q traders are, and they wouldn't wait for the second bearish flow day. They would have shorted on the first day itself. The stop would be above the recent high at that time. The stop was never hit. Then price came down, hit the lower boundary, easily covered much more than the risk distance, and we would take profit in the trade. We would not wait. That's the Q guideline. And on Thursday, QQQ had a massive recovery from the low of the day to the high of the day. It was about 7% change from low of the day to the high of the day. But on a closing basis, it was not so big move. But still, it was a significant reversal with big move up 3 bullish momentum signal. It regained the watermark support, regained this weekly watermark pivot support. However, it would be not easy to buy QQQ on Thursday at the close because stop would be very far and it is still in a downtrend. We would like to book profit maybe at the declining trendline resistance or maybe even at one of the declining direction lines. That would not give very high reward risk ratio. And later on, when we look at the global market breadth, we would see that though QQQ rallied a lot, under the hood it was not showing enough bullish signals on Thursday to take a long position on QQQ itself. Individual stocks, some of them might have given valid, attractive reward risk ratio buy setups on Thursday, but not QQQ. Is it time to buy now? I will not do that for QQQ because there is a declining trend line resistance. All the direction lines are coming down. Price is already significantly above recent low. And let's check that out using the measurement tool. Do I have to increase the font? It is 8.5%. You may not be able to see it clearly. I'm not spending time to increase the font size. It is 8.5% move from Thursday's low to Friday's close. And stop has to be little bit lower than Thursday's low, so it will be about 10% away from Friday's close. That may be a bit too much to take a trade in QQQ itself, which is an ETF in a downtrend. There are better buy setups, and I shared some of them on my website. I'll go through them, but let's go through the other ETFs first. SPY. Again, in the last webinar, in this area, I suggested shorting. We would short using one of the bearish flow, actually the first bearish flow. Why wait for the second one? We would put profit easily at the lower boundary, and Thursday again it had a sharp reversal. Not reversal candle, but sharp reversal from low of the day to high of the day. Regained the watermark support, regained the weekly watermark support. Friday price went up again, too close to the trend line resistance to take a long position as of Friday's close. Still in a downtrend. That was true for QQQ also. Dia. In the previous webinar, actually last two webinars I mentioned, I would be least inclined to short Dia because it had this trend line support in weekly. And we can see this week, though price sharply came down initially, in the weekly it closed almost back to the same trend line support. These trend line supports, like other Q signals, are very effective, and that was the right analysis for 2 weeks in a row in previous webinars that I made, that it would be least efficient to short Dia. It would be better to short QQQ or SPY. Now it has recovered Thursday and Friday, but it is still in a downtrend. I would not like to buy Dia. There are other better instrument stocks to buy. And lastly, IWM. Also recovered Thursday, Friday, and very close to trendline resistance. I'll not like to buy now. You could buy on Thursday very near to the open. Why I say that? We had a bullish headwind in the daily at the exact same price level earlier that led to a recovery. Looking at that, when price dropped to that level on Thursday, then started to go up using intraday pivot chart, you could easily buy IWM. On Thursday itself, you could book partial profit at the close on Thursday, and you would probably exit the remaining position on Friday when price came near the trend line resistance. Also in a downtrend, no reason to buy now. If it goes down, we may short it, but there are better shorting opportunities probably in QQQ and SPY if the market goes down next week. Now let's see what we can read from the market breadth, then why I mentioned that Thursday would not be an easy day to buy many stocks. Very powerful chart, the single chart, market breadth total view, that combines the insight from two composites and 4 major indices. Let's expand it a little bit. You can see on Thursday this candle chart, which is actually a composite index from the 6 indices. It's a custom index in Q Global. The custom index USA market total view recovered on Thursday, but it did not have any accumulation count and it did not have any Eureka Day. Eureka Day is one of the HSI-like signals created by Ian Woodward, may him rest in peace. Those are shown by cyan colored candles. Those are days where bulls are in control. There was no Eureka signal on Thursday and there was no accumulation count. That means from the low of the day price recovered. However, there was no broad and deep buying, which changed on Friday. And we are looking at data, no bias. On Friday, actually, there was accumulation count in 4 of the 6 indices. They came in NYSE. I can look at these green dots. They came in NYSE, S&P 500, NASDAQ 100, and Dow Jones Industrials. Did not come in NASDAQ, did not come in Russell 2000. Friday, we could buy stocks more confidently. Friday, we did not have to wait for the close. We could buy near the open. Why I am also saying that is because I am also looking at the 3-month new high low. Dr. Jeffrey Scott uses it regularly and I have started using it regularly as well. You will notice every time like a clockwork when 3-month new high low, and again this 3-month new high low is not on one index, it is on the 6 indices together. Every time it hits the lower extreme drawn by the 2 horizontal lines, it recovers. What recovers? At least some stocks recover. Sometimes more, sometimes less. So when you saw on Thursday price closed higher, there was no Eureka Day, there was no accumulation count. However, the 3-month new high low had hit the lowest extreme and tilted up. You would be ready to buy on Friday at the open. What kind of stocks? You would buy stocks in strong industries or accelerating industries, in stocks that are giving proper Q buy trade setup, low risk, attractive reward risk ratio, and you would buy stocks with strong fundamentals. You could buy them on Friday near the open itself. Now, if I wanted to analyze this with the support resistance chart, all I needed to do is click the custom menu option. Why I wanted to do that is to see whether it has a pattern similar to any of the market ETFs, and it has a sharp recovery on Thursday. Friday price continued to go up, but it is continuing in a downtrend, not very far, some distance away, but not far enough to take a swing long trade at Friday's close. That means overall market is still not telling us to buy. Let's look at it using weekly, daily at a glance, see how the weekly is looking like. Very similar to the major ETFs, weekly also recovered the pivot support watermark, and daily also did that, but it is still in a downtrend. Now let's look at how Nasdaq is doing relative to NYSE. For many months we are seeing Nasdaq was underperforming NYSE. Let's see that. Let's look at the yellow line. Left side is left side is Nasdaq, right side is NYSE. The yellow line, percentage of stocks above 50-day moving average. That went below 20% level, from which point I start to look to buy. At this point, it went below the 20% level again. Now we saw that there is a bullish divergence. We can see Nasdaq Composite made a lower low, but the yellow line made a higher low, both at the red line below 20% level. So in fact, looking at that, you could be ready to buy some stocks at the open on Friday, because we also had some internal reason to have buy positions. Currently, the yellow line is around 28% level. And for NYSE, it is at 38% level. So about 10% better in NYSE than Nasdaq, and we are seeing this difference for many months now. What kind of stocks shall we buy? Shall we prefer Nasdaq or NYSE? From the yellow line, based on data, we will prefer NYSE stocks, not Nasdaq stocks. And also, we can see we had an accumulation count on Friday in NYSE, not Nasdaq. Relatively, NYSE is certainly better. What about the mega caps? Let's look at the mega cap index. Very similar to the major ETFs QQQ and SPY, had a rally from the low of the day on Thursday. On Friday, price went up. Now, when we see this huge rally in mega cap custom index, then we can understand that why Thursday we did not need accumulation count for market to go up, because mega caps were reversing sharply, and most of the major indices are market cap weighted. So mega caps have an outsized influence on them, because mega caps reversed sharply on Thursday. Many of the indices went up. It did not require broad and deep buying for the market to go up. Mega caps sharp move was enough. If we want to analyze the mega cap using weekly daily, let's see if the pattern is similar to the major ETFs, SPY, QQQ. Yes, it is. Weekly recovered the watermark pivot, daily recovered the watermark support. Thursday, Friday price went up, but it is still in a downtrend. The low risk opportunities will not come on the bullish side, neither in the market ETFs nor in the mega caps. Where will it come? We will find them from top-down analysis. We'll start to look at the strongest industries and then drill down to strongest stocks, then find buy setups. But before that, let's look at the market from some other angles. As usual, the very useful sector industry stock advanced decline breadth, 1 month to 1 day. 1 month is now bullish, 10-day, 5-day. Okay, 5-day bullish, 2-day, 1 day is also bullish, only 10-day is slightly bearish. Overall, it is a bullish picture. Earlier it was bearish, and looking at that, I would like to have my directional bias to the upside. The market breadth total view also told the directional bias to be upside, though there was trendline resistance nearby, so I would not buy the indices themselves. But looking at this breadth inside across sectors, industry stocks, my Directional bias is certainly bullish because it was much more red earlier and now it is turning up. Is it already overbought? Let's look at the bucket analysis. The percentage of stocks that are above upper Bollinger Band, that is the percentage of stocks in the uppermost bucket here, is at only 9.2%. It is overheated when it reaches 30 or 40%. It has a long way to go. It is not overbought at all. Is it bullish? When we look at the bucket analysis, the answer is yes. By looking at this percentage of stocks above mid Bollinger Band, it is bullish but nowhere close to being overbought. Therefore, directional bias is right to be bullish. Will we arrive at the same conclusion when we look at technical breadth? Technical breadth is very important because finally we make money buying a stock if the stock goes up, and if the stock goes up it should be reflected in the technical analysis. So technical breadth is very important to actually make money, which we can read from Q Finder. First look at the weekly picture. All signals 76% bullish, strength signal more bearish, however that was followed by very bullish reversal, and as I mentioned earlier, reversal bullish following strength bearish, together they become bullish, and we can see the reversal signals in absolute number was much higher than the gap downs. Therefore, together we have to say that this is bullish. Bearish strength with bullish reversal, together it is bullish, and trend continuation is certainly bullish. So we could look for either trend continuation trades or reversal trades. Both we could look for. This is looking at the weekly chart. Now if I look at the percentage of stocks displaying bullish headwind in the weekly interval, an important matrix, if that is at 1% or more, I have seen that market continues to go up, at least enough to give us some profitable swing trades, and it is exactly at 1% now. If I look at Friday's picture, it is very bullish. Across all signals 97%, strength signal 97% also, trend continuation 98%, reversal 95%. All are much above 90%, very close to 100%, some of them. Now if market was already extended, I would be cautious to buy under such a circumstance. When technical breadth is 95 to 98% across the categories, if the market was extended, I would protect my profit. I would not short, of course, but I would protect my profit in long positions. But that is not the case. Market was not extended, is not extended. Market fell down sharply, and we saw from bucket analysis it is far from being overheated. So this is a strong bullish move from an oversold condition. I like to buy. And what kind of stocks I could look to buy? I could look to buy breakouts whenever these percentages, technical setups which are in full capital, these are actual setups, and if something is not in full capital, they are technical signals. So whenever a technical signal or setup crosses 10%, it is easy to find trades from that category. So we could look for breakout longs, we could look for trend following longs, we could look for pullbacks also. We could look for any of the trade setups, but it will be easier to find trades from the categories where we have more than 10% stocks giving the signal. So technical breadth is also suggesting taking a long position. Now I could look for some of the stocks I shared in the forum before knowing the result, and they are probably still in play. Why don't we look at some of them? It is, in my view, the best one can do about a system. Share ideas using a disciplined approach before knowing the result, without worrying about the result actually. We worry, if anything, we worry about the discipline of following a robust system. Is the system robust? How do we know? That we have to prove to ourselves by logging the trades in a diary and accumulating maybe 30, 50, 100 trades and see how they are doing. If we are disciplined, then it will show the result. If we are not disciplined, the diary will tell us that as well. At least the Q diary will do that. Now let's look at some of the stocks I shared. Pfizer, this I shared on Friday. And I used the Q snapshots. The industry score improved. This is the relative score, pharmaceuticals industry. It improved, but the real-time score is not in cyan color. Also doesn't of course have the checkered background like it had in these two periods. Checkered background means top 20% or bottom 20%. Cyan means bullish or relatively bullish, relatively stronger. So it was not one of the strongest industries by any means on Friday. However, it still went up by 2.2%. So the industry allowed me to buy. Relatively, it was not the strongest, but it was strong enough to buy a stock in the industry. And it's a defensive industry, which may be attractive under the current geopolitical tensions. The stock itself was up by almost 4%, 3.99% when I clipped this snapshot. The stock has a nice dividend yield of 3.48, almost 3.5%. Undervalued stock, robust earnings quality, high earnings growth, and accelerating earnings growth. High revenue growth, accelerating revenue growth. Funds are accumulating. Analysts, if you rely on them, I do not, but analysts are also bullish. I look at the funds accumulation. So it was better than what I call the diamond category. Undervalued with earnings growth, revenue growth. You can see in itself also 71% of peer stocks were up. If you look at the right side graphs, year on year quarterly earnings growth sharply accelerated. Revenue also going up, accelerating. So fundamentals were good enough in terms of multiple angles, including dividend. And then I looked at the chart. Q traders, me included, pay heed to the trendline supports. The weekly trendline support held. Price came right to the trendline support and bounced up from there. The candle color in weekly is still magenta. That is expected because it is after a sharp drop. It will take some time to change to yellow, maybe one more week. But it bounced right from the trendline support, and if I clear the lines, I have pointed by this arrow, it displayed a bullish indecision at the bottom. And in the daily, we can see this sharp drop. Price came right to the white direction line and again the trend line support. We had the bullish indecision on Thursday. Thursday we still had a red candle. You may not be able to see it clearly on this chart. You may look it up on your system. On Thursday we had a red candle but with bullish indecision. On Friday we had bull release signal price bounced up from very near the trend line support and regained the white direction line. Just prior to that, jump and thrust, at least jump hit the extreme and thrust was close to the extreme low. Friday's up move. Notice that it was not on Thursday, but Friday's up move had big move up to bullish momentum and bull release shown here. After prolonged period of bearish control, bears gave away. We can see the bull release here also as the green dot below the candle. So we had enough signals in a very strong fundamental stock. Defensive area stop would be just below the trend line support, very narrow stop. That's why I shared the idea and I took a long position also in the stock. Now another thing to note, I will go back to previous week's webinar. Previous week, in fact last 2 weeks, my market view was bearish and I was not sharing any bullish idea. In my view, trying to buy stocks when my market view is bearish is going against the current. I may buy some stocks in industries that are going against the market, maybe gold mining if that goes against the market when market is going down, but otherwise there is no point trying to find bullish stocks when my market view is bearish, so I didn't try that. However, Thursday and then Friday things changed. Friday I looked at some stocks, looked at the market, my market view became bullish and I was ready to buy the stocks. I didn't think about geopolitical tensions, the fighting going on in different countries. I am aware of that news like all of you are, but in trading I don't decide to trade or not to trade based on that. When I got the 360 degrees trade setup in Pfizer, I bought. And I have my stop, I have my risk management. I didn't put all my money in a stock, I never do that. I take small risks, maybe 1% of my account side risk in one trade. So I'm not afraid to lose out on a trade. I'm not actually not at all afraid to take a risk because I know my risk is minimal and over time my reward will be higher than the risk. So Pfizer one was one stock I shared and I bought. Let's look at some other stocks I shared. STLD, steel industry stock. You can see here STLD. But I will not look at the post. Let me explain exactly how I found that stock. My market view was bullish. So I could look at the sectors. Okay, let's look at the sectors. But as I mentioned many times before, when I do top-down analysis, I start from industry level because sector may sometimes hide the strength of certain industries or weakness of certain industries by averaging them out. Not all industries within a sector are related in terms of market move. They are related in terms of sector naming, but not related in terms of market move. For example, materials sector has gold mining, forest products, steel. They are all materials related, but in terms of market move, gold and forest products don't have any reason to move together. So when we are looking at sector analysis, it's fine to do that. Look at the sector rotation table to see which sectors are strongest on Friday. They incidentally were materials and financials. Actually, I didn't look at that before. Materials was actually the strongest sector. So it's good I bought some material stocks, STLD, but I didn't start my analysis from materials because sometimes materials may not be strongest, but steel industry may be very strong. In this case, materials were strongest also. Which ones were weakest? Energy and infotech. Interestingly, infotech was the weakest, relatively speaking. If you see the actual percentage change, of course, infotech was also up. We can know from the summary information at the top, all the 11 sectors were up. But relatively speaking, infotech was weakest. And I mentioned when looking at mega cap custom index that I would not buy mega caps now. Most of the mega caps are technology stocks. And when looking at Nasdaq versus NYSE, we saw both in terms of percentage of stocks above 50-day moving average as well as in terms of accumulation count. NYSE was stronger. Now from sector level also we see there is less reason to buy infotech stocks. Yes, infotech also went up, but why not buy in a sector that went up by 4% instead of buying in a sector that went up by 1.3%. So that is a sector level view. But I did start with the industry level view. Went to industries, and during market hours I used the real time period. Now market is closed. Let's use the 1 day period. Sorry. Let's double click to sort, and you see which industry came to the top. And this is exactly what I saw during market hours when doing the real time analysis. Still came to the top. No question. We could look to buy in the steel industry. So I drill down into the stocks in steel industry, and because the market is going through some geopolitical issues, I wanted to focus on the best of the best stocks. So I wanted to look for stocks that were having great valuation, value stocks with earnings growth and with revenue growth. So a diamond classification. So I didn't go through all the stocks. Once I came to the steel industry stocks, I clicked the diamond button. Several stocks came in the list, and STLD was one of them. Let's look at STLD's chart. And you see how easily I am navigating between the different programs, having a full screen view of the daily chart first. What can we read? This is exactly what I read during market hours. It hit the jump and thrust low. From that point, a recovery was expected. And if you watched it at that time, when it went above the watermark pivot, you could start to buy from somewhere here. I didn't look at it at that time. Maybe because my market view was not so bullish at that time. But that changed on Thursday, Friday, and that recovery from jump and thrust low continued. It came near the trendline resistances, three of them. I wouldn't buy near trendline resistances, and incidentally it did display bearish indecision, bear release, bearish indecision, upper tails. I wouldn't buy. Thursday it had a bullish reversal day, not exactly reversal but strong up move from the low of the day, but it closed below the trendline resistances. I wouldn't buy. On Friday it cleared all the trendline resistances. Now when you use the real-time analysis and you saw steel was the strongest industry and it did break the first trendline resistance, you could use intraday pivot chart to take a low risk entry. I don't remember exactly when I entered the trade, but I did take a long position in STLD also. We see at the band indicators that it gave big move up, three levels of big move up. That is a very bullish momentum, breaking three trendline resistances with bullish pressure. Now if I looked at it using weekly, daily, I always look at weekly before taking the trade. Don't we have even more reason to take a long trend? Weekly also had a breakout of true trendline resistances, very bullish shape, bullish color candle, and you can see from here it had a reversal candle. That is a very strong looking chart both in weekly, daily. Will I put stop below the recent low? I will not do that. That will be too far. So I am assuming my stop will be somewhere below Friday's candle. It reverses, if it reverses all the way, closes below Friday's low, that means it goes below the trend line resistances again, both in daily and weekly. The reason for me to be in the stock will be cancelled and I will stop out in the trade. So I have sized my position accordingly. I shared it on Friday. I have a long position in the stock. Another stock that I shared was a gold miner. Let's look at the forum post. KGC, Kinross Gold. Like Pfizer example, here also the gold mining industry improved in relative score. It was not one of the strongest. We know that from the color, but still it was up by 2.3%, good enough to look for a buy candidate. And I found the stock Kinross Gold. At that time it was up by 3.3%, undervalued stock, and 86% of peer stocks were up. Has a dividend yield of 2.2%. It is enough to look at valuation or earnings growth in Q techniques to buy a stock. If both of them are there, great. But KGC is a gold mining stock, defensive stock in some way. So I was willing to buy a gold mining stock like KGC. In steel, I wanted to look for undervalued with earnings growth, revenue growth, and luckily I found some. But for gold mining, I was willing to be more flexible. So this was good enough reason for me to buy. I actually looked at the other peer stocks also because 86% of them were up and I thought KGC had a better technical setup. What setup did it have? It had a bounce setup, and bounce is one of the exertion based setups. You could say a kind of box setup also, but it's a defensive play. It came to the trend line support, stopped right there on Thursday. Friday tried to go down, immediately reversed, went back above the trend line support. You could buy right at that time. I don't remember. I don't think I could pinpoint to that accuracy in this case, but when I shared it, the candle shape was still bullish and it was still far away from the trend line resistance. That gave me an attractive reward risk ratio. And I think I mentioned in the post, unless we had an upper tail, this should confirm the trade setup. I didn't check how it closed. Let's look at the stock KGC. It had a very small upper tail, that is a bullish enough candle. Anyway, I took a long trade before that and I am in the trade by now. There was another short trade I shared on, possible short trade that I shared on Friday, but that did not confirm. That was Caesar, this stock. Let's look at the post because it didn't confirm. It's good to have a look at the stock. Now, when I shared the idea, my market view was already bullish. So this is the difference between the long trades I shared on Friday and the short trades. My market view was bullish, so I shared long trades. I was willing to take those trades intraday and hold on to the trades. For Caesar, it was not the case because it was going against my market bias. But still, I wanted to, I somehow chanced upon this stock and the industry. Now, notice the sectors were very strong. All sectors were up. But as of the time I shared it, later on it changed, but as of the time I shared it, this industry was actually down as a whole. Casinos and gaming, it was one of the strongest over 2-day period in real time became very weak. The score sharply came down, and that was shown by the real time deceleration. So looking at the deceleration and the weak strength and the fact that on a bullish day this was down as an industry, I wanted to look at some of the stocks, and I found this stock CZR sticker symbol, overvalued stock with declining earnings growth, declining revenue growth. Funds are not accumulating, no dividend. Earnings per share is in fact negative, losing money. And look at the graphs, year on year, quarterly earnings growth and revenue growth sharply coming down. No wonder this stock was down as of this time, at least that is 10 a.m. Eastern Standard Time. As of this time, the stock was down in spite of all the market ETFs going higher. I remember all the market ETFs were above early range high, but this stock was still down. And I looked at its technical chart. It had a pattern opposite to that of Kinross Gold. Kinross Gold was also between trendline resistance and support, but Kinross Gold was near the support and this was near the trendline resistance. In fact, multiple of them, and it was going down from this trendline resistance. It was down from yesterday, from Thursday. So looking at that using intraday chart, you could look to short. However, market bias was bullish. All the market ETFs were going up. So you would not like to assume that it will easily confirm the trend because it was going against the market, and I think it didn't confirm the trend. It would confirm the counter bounce short setup if it did not have any lower tail. Let's look at Caesar as of Friday's close. It went up. In fact, it closed higher than Thursday. I know that, you know that by looking at the volume bar. It is in green color, so it closed higher. So it did not confirm any bounce short setup. If it came down, closed lower with bearish shape candle, it would have confirmed a bounce short setup. If that did not take price too close to the trend line support, I could hold that short position or enter the short position at Friday's close, but it didn't confirm. So one short idea I was looking at didn't confirm. All the long ideas I looked at confirmed. That is also looking bullish for the at least the stocks and industries that I selected. That's how I identified the trades in real time and shared them, carried out the top down analysis for Steel Dynamics, and for Kinross Gold I found it using Q Finder. We are at 1 hour point. I'll not go through more stocks today, but you have access to the Q systems or any other system that helps you do the top down or bottom up analysis. You may find buying candidates that are at low risk and do not, in my view, have to worry too much about geopolitical issues for short term swing trading, so long as we are managing the risk and stop is narrow. That's exactly what I do and what I did on Friday. That's all for today. Thanks a lot for joining. I look forward to seeing you in my next public session that will be coming weekend. Have a great weekend, and as these examples show, no reason not to do that. Trade profitably. Thank you.